What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we're covering 3 stocks that are a little bit on the cheaper side that you could wheel for passive income. So if you're excited for today's video, as always, feel free to like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. Now, again, we're looking at about like 80-something% of you guys who are watching these videos are not currently subscribed. Again, the subscribe button you can find down below. And if you watch it but you don't like the content, let me know down below as well in the comment section. Hey, Fridge, do this. Or, hey, Fridge, I would like it if you did that. You know, anything you can give me for feedback so that way it's not 80% of you guys who are just watching but not subscribed. You know, what can I do to help bring the content to you guys? So we're gonna be looking at 3 stocks here and a little bit of some analysis behind each one of them. The 3 stocks we're looking at, as you can see on Webull, are SoundHound AI, Intel Corporation, and American Airlines. And I'll give you my thesis behind things, my logic behind it, and some different plays you take a look at to get some really good returns still overall. Because again, the wheel strategy, the idea behind it is that you're selling cash secured puts, so you need the cash to buy the shares. And if you get assigned, you then use those 100 shares to then sell covered calls for more passive income. The wheel strategy is a passive income strategy idea, but you got to be doing it on companies that you don't mind owning. Keep that in mind. If you're doing it just for the premium, that could go downhill really, really quick. So what we're taking a look at here, first one up is SoundHound AI. Now, just in and of itself, has the name AI in it, and we know that AI is taking over in terms of the markets. Everybody's putting a lot of money, billions and billions, into AI every single day, whether it's NVIDIA, Microsoft, Apple came out with some new information about AI recently as well. So everybody's making this adaptation to it, and SoundHound AI has done very, very well. Not as high as $25 at one point. And again, this rally was because NVIDIA, I believe, owned stock in SoundHound AI, if I'm not mistaken. So it got a huge pump up here. And then when they disclosed that they don't have the shares anymore and they sold them off, they then came back down. They had a really good earnings report. They bumped their guidance. And if you're not familiar with what SoundHound does here, taking a look at SoundHound AI and how it works, again, they have some really good partnerships with a lot of well-known companies here. Basically, you're able to do phone orders for it. It's all AI generated for things, which is going to be good for businesses because, again, they can use this software instead of having to hire people for it, and maybe it costs them cheaper in the long term, which is, not always good for us, but would be good for the business side of things, as we know. Very cool thing to look at here. You may have already seen it. They're known in very, very name brands. A6 is a big one. You also have Hyundai, you have Kia, Genesis, Stellantis. So the car companies, especially, maybe it's almost like when you can do Siri in your car with Apple CarPlay, kind of similar ideas there. It's in Lucid Cars as well, Pandora, Jersey Mike's, Applebee's, Chipotle, White Castle, LG, Samsung, NVIDIA, Oracle. It's a huge company that has a lot of name brands attached to it or associated with it. Very cool software, and if you read through this company here, you can see what they kind of teach you about. If you go into like the fast food ordering places, you might be ordering through SoundHound AI software, believe it or not. Very interesting, very impressive company. And when you take a look at this stock in particular, the options are very, very good in terms of premium. The reason why is obviously because when you take a look, they're not still a profitable company yet at the time of recording this. Where's their earnings per share? The earnings per share is still negative right now, so they're not yet profitable, but they are forwarding their guidance and upping the guidance for the future, which is a good sign. Once this company goes from non-profitable to profitable, oh boy, this thing could take off and hit those $25 prices, in my opinion. Obviously, this is not financial advice, but things to keep in mind about. But if you're looking at selling options here in cash secured puts, you can get some very good premiums here because, again, not profitable yet. The implied volatility is very, very high, and this is a company that I think could do well long term as long as it keeps developing, keeps growing this company. For example, you want to get in at $14 here, you get paid about $50-something for it. You're looking at about a 4% ROI in a month. In 36 days, you're looking at a 4% ROI, and the cash you need is $1,400. Again, $14 per share times the 100 shares gives you that $1,400 that you need for cash to secure these puts here, essentially. Which isn't bad. $1,400, you get $50-something back in a month, if you keep doing it over and over and over again. Again, you're looking at a very good return, about 4% or so in a month. Do that annualized, looking at about 48% in the year. Very, very nice as well. And again, if you want to look at the call side of things, for example, say you got assigned shares, you want to look at the call side here. The call side premiums are still very, very nice. For example, say you had 100 shares right now, you go about, a little over a month out here, you could do a, $18 put op or $18 call option here, gives you $1.50 in share appreciation, and it also gives you $100 and something here as well in premium. So SoundHound AI for me, I think is, if you're starting off with doing the wheel strategy, not a bad company, a riskier investment for sure, because again, it's a non-profitable company, but I think they do have some very good potential in the market. And as you can see, we've now come back up to that golden zone in my Fibonacci retracement levels here. It consolidated there for quite some time, broke down. Now we've got a nice little bit of a recovery here. And again, pushing back to $25 wouldn't be unheard of if it can continue to grow their platform and to grow their software. So very, very interesting company overall. Again, I encourage you to look into it yourself and do your own research before doing obviously anything else, as we know. The next one that we have is Intel Corporation. Now, Intel Corporation, as we know, has been absolutely slaughtered. Their earnings were bad. They got a new CEO in place. Donald Trump's been talking about them and saying that they should be, fired the CEO or whatever he says at this point about Intel here. And it has been on a bloodbath. It was up at $50 per share towards the end of 2024, and now it has come back down to a whopping now $22 at the time of recording this. A very interesting and speculative play here, of course, again, because they're kind of falling behind the game of software, of AI, of all these different things here. Their earnings report, again, they missed on their earnings report. Their revenue is there, which is good. They're looking at cutting back the labor force, which could increase their margins by the end of the year, which is a good thing to think about. But still, this one is still more of a speculative play. I wouldn't mind it as much when they used to pay a dividend. They used to have a really decent dividend yield here, but then they cut the dividend, obviously, to kind of make ends meet. That dividend cut is what crashed the price even more, and now we're trading at around $20 per share or so. And now it's not profitable again in terms of their earnings per share. They're negative. I believe at the time of recording this, their earnings per share is negative. Yeah. So, right now we're not doing too hot right now for Intel, but again, the reason why I don't mind Intel potentially is because they are based in America, right? So they have a lot of places in America where they're building their software, they're pushing their products out here. And again, everybody knows the name Intel. You buy a new laptop, it has a sticker that says Intel Core i9 or whatever the case is. So it's a very common name that's associated with computers, software, laptops, desktops, whatever the case is. And they're made in America, right? And that's actually a pretty big thing considering all the tariff implications, the pushing of tariffs, the news around tariffs, and all these different things here. They're made in America, so they may benefit from this long term. Again, what really focuses now is how the new CEO is going to turn things around for Intel. What is he going to do? How can he push this product out? How can he revamp this company to then become profitable again? Again, right now they're trading at a market cap of almost $100 billion, which is insane. There's a lot of money here to be made here, but now it's a matter of, can Intel turn it around? But I will say, again, now that they don't have a dividend anymore, which obviously was a problem for a lot of people, is that now you could sell options and get a little bit more premium based off of it, because usually the dividend paying companies don't have as high of a premium because of the dividend yield. And taking a look again, going about 30 days out or so, you could sell a put option here. You could sell basically a $20 put option here, so you need about $2,000 or so. The last one was about $1,400. You need about $2,000 or so here, and you would make about 2% in about a month. 2% a month, 24% a year, still way better than the average 10% in the S&P 500 that we're looking at here. You want to go a little bit more riskier, you can go the $21 put option here as you wanted to. There's a lot of different options you can go. You can go the less passive or the more passive route of $19 per share, but it's very, very, again, not a lot of good, a little over 1% in a month, which, would be a little over 12% a year, which isn't really an amazing return compared to the S&P 500. right? So things kind of keep in mind about, they're not a bad company to definitely look at wheeling. And then again, you could sell covered calls as they hopefully get a rebound. Again, will it rebound to 50? Honestly, who knows? But the first rebound play could be that $25, rejection region that you see up here on the fib levels here. It's rejected it multiple times. So you might get that nice little push back up to 25. Then after that, it'd be 30 back to the golden zone, which we had that consolidation before, which is really, really nice. So there is some potential for this stock to do very well in the returns. Just a matter of, are you comfortable with investing in it? Are you comfortable with owning 100 shares of it? And do you see a profitable future for Intel? And again, if you ever need to, you can always go on to Intel's website, research. They have so many different products here, which is good. They have a lot of partnerships, as we know. So Intel is obviously a very good company you can look at, potentially based on your risk tolerance and your research and everything else. Okay, the last company that we have here is one that people wheel every single day, but here's another example as to why you can wheel a strategy for some good passive income. American Airlines right now is trading at about $13 per share. At the time of recording this, it was as high as $19, as you can see here recently, before it had a huge pullback here. And now we're basically breaking back into this golden zone here, which is really good. Obviously it kind of tends to retrace back to it. It had hard resistance here before, and it has now since broken through. It has some nice support here at the $11 strike that you'll see right here, which is perfect for selling cash secured puts here. So if you go again about 30 days out or so, the $11 strike price now is about $12. It had a big rally recently because of CPI data, which we're going to talk about a little bit in a little bit later on. But again, you can still sell a $12 strike price, get about $30 for it, about a 2.5% return. Again, 2.5% over, the 2.5% over the 12 months. You're looking at, close to 30% ROI, I believe. Let me do the quick math there. About 30% ROI, give or take, potentially on this kind of trade here. Which again is way better than the S&P 500. And why I like American Airlines right now, it's been a stock that people have been wheeling for many years, but CPI data just reported some very good news for airlines, which is why they pumped up so nicely. So data from the Labor Department's Bureau of Labor Statistics on Tuesday, talking about the CPI data, showed airfares rose 4% in July, after slipping 0.1% in June, marking the first increase in 6 months. Which again led to a lot of, people traveling, buying, trips, taking airplanes, stuff like that, going up 4% in July after going down 0.1% in June. That's what caused a lot of these airlines to take off as a result of it. As you'll see, you get this big green candle here because of the CPI data report. Since there's a lot of people that are spending and putting money into airlines and prices are increasing, that's good for companies like American Airlines, for example, here. So could definitely be a very good potential play to look at, would be American Airlines, because of this kind of data that comes out saying like, hey, flights are in demand again, prices are increasing. Obviously, a problem that you would have with it is, or not a problem, but more of a thing to think about. Well, of course they're up fridge. It's July. What do people do in July? They go on vacation. Why is that? Well, teachers are off, yes, like myself, but that means schools are closed, students are out, which means that they might be going on those family trips over the summer vacation, all those kind of things there. So of course, flights are up 0.4% in July, right? June, it was down 0.1%, which again makes sense because schools for the most part was still in session, give or take, right? So July also has 4th of July weekend. You have all these different things. A lot of people like to travel in July for that reason. So maybe that's the case behind this pump in the airfare. Maybe, but the fact that it's up so high still is a good indication for airlines overall. And again, as you can see, it had this resistance at 12.55 and it has now broken through. So, you might have now maybe a potential support level at 12.5, which means that if you do sell a $12 strike put option here, again, a decent return. And again, even if it comes back down through that, you still get it at a cheaper price than what it's at right now. So American Airlines, a very good one to look at trading potentially in the long term. And, again, airlines are here to stay. People are traveling, taking trips. I think it's a good company to look at. So these are the 3 companies that we're looking at here. Again, some cheaper options to do wheel strategies with. Again, you can sell cash secured puts, then you get assigned those shares, then you can sell covered calls to then make some more money as a result. So thank you guys so much for watching today's video. I hope this gave you some insight into how you can do the wheel strategy here. If you made this far in the video, feel free to like the video, subscribe to the channel, turn on the bell notifications, share it with your friends, your families, whoever it is that you would like to. As always, I hope you're making money in the market. And as always, I will see you guys in the next video.